discussing a numerical problem on the redemption of the preference shares. So let us consider an detailed example to illustrate the accounting process for the redemption of the preference shares. So the scenario is a company issued 10,000 preference shares of rupees 100 each, which is fully paid. The company decides to redeem these shares at par. The redemption is to be carried out partly from the profits and partly from the proceeds of the fresh issue of the equity shares. The company decides to use rupees 6 lakhs from its profits and raise the remaining amount through the issue of the new equity shares of rupees 10 each at par. So let us just take this scenario into our workbook and learn step by step. Let me make the new folder for redemption dot preference dot mp. So the question is, the company issued 10,000 preference shares of rupees 100 each, which are fully paid up. The company decides to redeem these shares at par. The redemption is to be carried out partly from the profits and partly from the proceeds of the fresh issue of equity shares. The company decides to use rupees 6 lakhs from its profits and raise the remaining amount through the issue of the new equity shares at rupees 10 each. So we'll do a calculation of the total amount of the redemption. Total amount of the redemption, we need to calculate it first. That is total amount required for redemption. $10,000 preference shares. The preference shares are rupees 10,000 into rupees 100 each. That means the total value is rupees 10 lakhs. Okay. Then step 2 will be what? We will calculate or determine the amount from the profits and fresh issue. So what is the amount from the profits? Amount from the profits. It is already mentioned in there in the question that it is rupees 6 lakhs. Sorry, it is rupees 6 lakhs. And amount from the fresh issue is remaining, that is rupees 4 lakhs. Okay. Now, for the redemption, we will 6 lakhs we will utilize from profit. But in order to redeem rupees 10 lakh, we need rupees 10 lakh. We cannot just redeem it from rupees 6 lakhs. That means for rupees 4 lakhs, we will have to issue new equity shares. So issue new equity shares. Okay. For that, number of equity shares to be issued. Number of equity shares to be issued at par to raise rupees 4 lakhs. How much amount we have to raise? We have to raise rupees 4 lakhs. That means rupees 4 lakhs divided by rupees 10 per share. Why? Because we need to make the equity shares at the denomination of rupees 2. Okay. So, journal entry for the fresh issue will be journal entry for the fresh issue will be bank account debit to equity share capital account. To equity share capital account. And the amount will be rupees 4 lakhs. The amount will be rupees 4 lakhs. Sorted. After that, we will create a capital redemption reserve. For the capital redemption reserve, the entry would be, first of all, we will transfer. Why do we need to do that? We need to transfer that profit. Transfer your profits to the capital redemption reserve. Okay. So the general entry would be profit and loss account debit. Why? Because profit will be where? It will be in the PL. Profit and loss account debit to capital redemption reserve. To capital redemption reserve. The amount will be rupees 6 lakhs. The amount will be rupees 6 lakhs. Okay. Then we will redeem the, after that we will redeem the shares. Or we will say our preference shares. Redeem the preference shares. So the journal entry for the redemption will be then preference share capital account debit to bank account. The amount will be rupees 10 lakh. Why? Because the entire, now what we have done, we have issued the fresh equity share. So we have rupees 4 lakhs from there, and we already have rupees 6 lakhs from our profits. So what we have to do, we have to just pay to the equity shareholders now. How much amount? The entire amount of rupees 10 lakhs. That's it. We have done it. And that solves our problem. So basically, these all will be the journal entries required. Now, let us just understand. For the fresh issue of equity shares, the company raised rupees 4 lakhs by issuing 40,000 new equity shares of rupees 10 each. Then they transferred that amount to the CRR. Rupees 6 lakhs was transferred from the profit and loss account to the capital redemption reserve to facilitate the redemption out of the profits. After that, the company paid rupees 10 lakhs to redeem the 10,000 preference shares at par value. ओके, सो पहले हमने फ्रेश इक्विटी कर लिया, उसके बाद हमने सीआरआर में अमाउंट ट्रांसफर कर लिया, जब हमारे पास पूरा 10 लाख हो गया तो हमने प्रेफरेंस शेयर्स को पे कर दिया. Then what will be the impact on the financial statements? First of all, for equity and liabilities, the share capital will be increased by rupees 4 lakh due to the issue of the new share After that, the preference shares will be decreased by rupees 10 lakhs due to the redemption. And the reserves and surplus will be increased by rupees 6 lakhs and the profit will be reduced by rupees 6 lakhs. Okay, because that amount is transferred to the capital reserve. Now it is a part of the reserve. In the asset side of the balance sheet, then there will be a net decrease of rupees 6 lakhs. Why so? Because 10,000 will be paid to the redemption and 4,000 received from the fresh issue. So net decrease in the cash will be rupees 6 lakhs. After that, for the profit and loss account, this will be decreased by rupees 6 lakh because we transferred our profit from PL account to the CRR. So based on this, we can reach on the conclusion that the redemption of the preference shares involves a series of the steps, including the issue of the new shares, if necessary, transferring the funds to the capital redemption reserve and making the redemption payment. Each step requires the careful accounting to ensure the financial reporting and compliance with the regulatory requirements. By following these steps and making the appropriate journal entries, companies can effectively manage their capital structure and fulfill their redemption obligations. I hope you have understood the video and understood the concept of the redemption of the preference share using the journal entry with a practical case scenario. Thank you so much.